Hello, I'm Susan Durham with Louisville Metro Government. I am here to present a training on internal controls. I'll go ahead and get started. This training is building internal controls into your American Rescue Plan grant program. And this training was created for our American Rescue Plan grantees. What is a finding? A finding occurs as a result of an audit or a grant monitoring when the auditor or monitor finds noncompliance in your grant program. Noncompliance means it means that the regulations, the requirements, policies, and procedures or laws have not been followed in some way. It could be any of those or more than one of those. Findings can be financial or programmatic. It could be on any type of regulation, requirement, policy, procedure. For financial findings, there is often a requirement that the funder be repaid. Here is a list of the most common findings from federal monitorings and audits. Policies and procedures are not documented or need improvement. Participant eligibility requirements have not been met or have not been documented. So even if they've been met, if there's no documentation they've been met, that's a finding. Debarment and suspension requirements were not met, and we're going to talk about that and I'll explain what that means in a few minutes. Subrecipient management requirements are not followed. Those of us who award federal funds to other community partner organizations are required to manage those organizations who are called subrecipients, and there are many steps that we must follow to be compliant. Time and effort requirements have not been followed, and that's related to charging personnel costs to federal grants. Also, a common finding is late reports, so that's either programmatic reports or late reimbursement requests or draws, they're sometimes called. And another very common finding is ineligible cost, inaccurate financial reports, or other financial errors. So the best way to avoid those findings, increase overall compliance, improve grants management, and minimize risk is to build internal controls into your federal grant program. Also, the Uniform Grant Guidance, which is Title II CFR Part 200, and this is 200.303, requires recipients like Metro government and subrecipients or our grantees of federal grant funds to include internal controls in all federal grant programs. Right? We have to build internal controls into all of our programs, whether we get the money directly from the federal government or we get the money from an organization like Louisville Metro Government, who serves as a pass-through entity. So I've had a couple of slides talking about internal controls, but I haven't yet told you what they are. An internal control is a step, process, or policy put into place to ensure compliance. There's a much longer definition, and internal controls have other purposes besides compliance, but for your federal grant, this is what we're caring about: a step, process, or policy that you put in place to ensure compliance. So why are these internal controls important for your ARP funded grant programs? They're going to give your organization and Louisville Metro government reasonable assurance regarding the achievement of objectives in the following categories: the effectiveness and efficiency of your operations, the reliability of your reporting, so those are your reimbursement requests, as well as any programmatic reporting and performance reporting that you're providing, such as key performance indicators, and your compliance with applicable laws and regulations. There are two main types of internal controls. There are several types, but this training focuses on the two that are most used for your federal grant program. And they are preventive controls, and it's what it is right in the name. They're to help prevent findings from occurring. They're to help prevent noncompliance. And then detective controls are controls you put in place to identify noncompliance after it's occurred. It's very important that you build both preventive and detective internal controls into your grant program. Here are some examples of preventive internal controls: segregation of duties. So that means having, let's say you have cash. Um, let, let's let's talk about your program might have an event, and there are cash registrations that people pay at the door. They pay some admission fee, and this is part of your federal grant program. And you might have one person count the cash, and you might have someone else reconcile that count with a cash register report or a computer report that shows how much cash was received during that day. So those are two different people, segregation of duties. Another preventive internal control is approvals, authorizations, and verifications. It's always a good idea to have someone prepare reports and someone review and approve those reports. So not the same person providing all the financial or programmatic data. Um, if nothing else, people are human, humans make errors, and the approval process should catch those errors. Another preventive internal control is reading and understanding the award terms and conditions. You should go through your grant agreement. You should go through the regulations associated with your grant. You should go through laws, your policies and procedures, and make sure that you understand all of the conditions. And the next line is developing and maintaining policies and procedures. Having those policies and procedures over your grant funded program will keep your staff on track to comply with those internal controls and build overall compliance of your grant program. Then you want to make sure you're training your staff and any subrecipients or grantees you might have. It doesn't do any good to have policies and procedures and rules and processes if nobody knows about them or they're too complex and can't be followed. So be sure you train staff and your subrecipients, have handbooks, manuals, whatever is necessary so that your grantees and the staff that you have can follow the requirements. With preventive internal controls, you want to be proactive and not reactive. Here are some examples of detective internal controls. One is reviewing programmatic and financial performance that's already happened. So you're looking back, you're doing your own audit of the financials, you're doing self-monitoring of the programmatic files, for instance, or programmatic achievements. Reconciliation, so all bank accounts should be reconciled at least monthly. Your financials do need to be reconciled, but there might be other reconciliations that aren't just financial in nature. You might need to do some programmatic reconciliations as well to determine the amount of participants you've had in a particular time. Physical inventories, so inventories of assets. It's very important. Those assets get inventoried at least every 2 years, according to the 2 CFR 200 subpart D. You have to monitor each program, function, and activity related to the grant. That's from 2 CFR 200 329. We are all required, whether we're the grantees or the subrecipients, to self-monitor each program, function, and activity. And then audits. So if you've got subrecipients, you're going to want to go monitor or audit them. If you have participant files, you're going to want to audit those participant files to make sure all the documentation is there. If you have a means tested program, for instance, Each participant has to be under 50% of the area median income. You're going to want to go back and do an audit to make sure everyone who received benefits under the program was under that 50% AMI. I've got some questions for you about internal controls. Which of the following internal controls are more likely to keep your ARP project in compliance? Preventive, detective, or a combination of preventive and detective? And the answer is C, a combination. You're going to put preventive on the front end and hope that catches everything, but you're also going to build some detective internal controls in to catch those things that slip through the cracks. It's very important you use both. File audits are an example of a preventive internal control or detective internal control. File audits are a detective internal control to see if all of the eligibility and other requirements were met. 2 CFR 200 and 329 requires federal grants recipients and subrecipients to monitor every function, activity, and program, every grant program over $1 million, or a grant program if the federal funding agency requires it to be monitored. And the answer is A, we're required to monitor every function, activity, and program, and so are you. We're going to go through certain areas of internal controls, and I'm going to discuss, or we're going to go over certain areas of common findings, and I'm going to discuss internal controls you can put in place to avoid those findings. So one of the big findings, as I discussed, was that policies and procedures aren't documented or need improvement. The internal controls you want to put in place are making sure your policies and procedures stay current. It doesn't do any good to have policies and procedures that no longer apply. And you need to keep them current. You want to make sure that you're reviewing them at least annually. You're updating at least annually if updates need to be made, but it's even a better practice to update as soon as a policy or process changes. Your policies and procedures should include the preventive and detective internal controls that you're using for your program. Put those in there. Make sure your staff knows them and make sure the staff is following them. Procedure documents should provide the reader or the user of those documents with a step-by-step guide to complete a task. So if someone comes on their first day, they should be able to read a process and get to the same end result as someone who's been there for a while. It should just be step by step and be written very clearly and concisely, and all your staff should be able to follow that process and get the same result. You need to make sure you're training your staff on policies and procedures, especially as new policies and procedures are developed and implemented, and make sure that your staff can find these current policies and procedures. The next area of common findings is participant eligibility requirements are not met or not documented. So the internal controls you want to put in place are to develop and maintain policies and procedures on determination of participant eligibility. As I said on the last slide, each staff person needs to be trained on those policies and procedures, and there needs to be a step-by-step guide. So everybody is determining eligibility the same way. Train your staff, implement an approval process. Remember, having layers of approval is a preventive internal control so that the approver is a different person from the intake person. Let's say somebody comes to your offices and wants to sign up for a program for which they need to earn less than 50% of the area median income. You will have an intake person take their information, do a review of their income, and then you will hand their file off to someone else who can do another review and verify and approve that that person is eligible for the program. On the back end, you want to conduct file audits to ensure eligibility requirements have been met and all documentation is present and maintained. As I said early on in this training, even if someone is eligible, if you don't have the documentation to show they were eligible, you may risk paying those funds back to the federal government, the funds used to support that person. Debarment and suspension requirements not met is our next common finding. And Title II CFR Part 25 and Part 180 require federal grant recipients and subrecipients to avoid giving funds to organizations and businesses that have been debarred or suspended from receiving federal funds. Debarment means that the entity in question has committed a fairly large violation of some sort, and that entity cannot receive federal funds for a period of 3 years, up to 3 years. Suspension means a less serious incident has occurred, and the organization might be suspended for up to a year. And in fact, I just want to stress, I think that this slide perhaps could be written a little better. I want to make it clear that we're prohibited, and you grantees are prohibited from giving funds to an entity that has been suspended or debarred from receiving federal funds. Absolutely 100% prohibited. So how do you know if an organization is prohibited? How do you avoid this problem? You go to the System for Award Management, which is sam.gov, and you search for these entities to ensure they're not debarred or suspended. Here's what it looks like when you go into sam.gov. In this case, I searched Louisville Metro Government, and here's our account. You can see next to our name, there's a little green dot, and it says active registration. And that means that we are good. We're in good standing with the federal government. We're not suspended or debarred. If you search an entity and it shows exclusion there instead of active registration, that means the entity's either been debarred or suspended, and you cannot give federal funds to that entity. Now, it could be it's a simple problem that the, let's say, partner organization is having with the federal government, just a small matter that needs to be cleared up. It could be they're suspended just until that matter is cleared up, which might be a few weeks or a few months, and you'll see that they'll go back to active registration. It could be something more serious where they've truly been debarred and they won't be able to get funds for up to 3 years. Now, those things I just told you don't have anything to do with internal controls. That's just some information about sam.gov and debarment and suspension. But here are the internal controls that you need to put in place to make sure that you are following the debarment and suspension requirements. You want to develop a sam.gov verification process that needs to include timeframes for checking sam.gov prior to awarding any grants or contracts, as well at points during the life of grants and contracts. So you might, before you issue a federal grant to another organization, look them up on sam.gov then, and then you might check sam.gov every month going forward till the grant ends, or every quarter going forward until the grant ends. It really should reflect your payment schedule to that entity. You want to make sure that at no time during the grant are you giving those funds, are you paying funds to a debarred or suspended organization. You also want to assign at least 2 staff members to register on sam.gov. That way, if one of them were to leave, you still have someone else in-house who can look up registrations on sam.gov. You want to ensure these staff members are trained in the proper procedures. not just on looking up sam.gov, but that everybody in your organization knows that this is an important step before the grants and contracts are issued. And you want to maintain documentation that sam.gov has been checked. So, for instance, that screenshot I showed you that shows Louisville Metro Government has an active registration. You want to download that active registration report and keep it in your file so you can show any monitor or auditor that you did verify the entity was eligible to receive funds before you awarded them. Got some more questions. How often should your organization or agency update policy and procedure documents? At least every 5 years, annually, anytime a policy or procedure changes, or both B and C. And the answer is D, both B and C, at least annually, and anytime a policy or procedure changes, you want to go ahead and do those updates. How should your organization determine whether a contractor is debarred from receiving federal funds? Check grants.gov, check sam.gov, or check with the Louisville Metro Revenue Commission. And the answer is B, check sam.gov, the system for award management. Right, we've got a few more areas of non-compliance, a few common findings, and I'm going to discuss internal controls in these areas. These are subrecipient management, time and effort, and late reports. In 2 CFR 200 subpart D, it is 200.331 and 332. There are a large number of requirements for pass-through entities, which are entities that receive federal grant funds from the federal government and award those funds to other external partners. So Metro government gets funds from the Housing and Urban Development Department of the federal government, for instance, and then we award those funds as grants to other entities. We are the recipient of the funds, and we are also the pass-through entity. We pass those grants through to other organizations who are called subrecipients. So there, as I said, there are many steps that we have to follow. This training does not cover those steps, but those of you who also award grant funds to other organizations, federal grant funds, should go research those, and hopefully at some point we'll have a lunch and learn that thoroughly covers those requirements. So you want to make sure that, as I just said, that your entity, that your organization knows these requirements. There are other requirements for those of you who are American Rescue Plan grantees in the Treasury Final Rule, which is the regulations for ARP. And then you want to go to Uniform Grant Guidance 200.331 and 332. You want to assign staff to perform subrecipient management activities and ensure that you provide them the training necessary to perform these duties, including sending them to external training if needed. If your organization is new to awarding federal grant funds to other partners, I highly suggest you seek out some external training and take it. There are free trainings online that you can find. Some of them have very good content. You want to make sure that you have policies and procedures related to subrecipient management, and that the policies and procedures are aligned with the Uniform Grant Guidance 200.331 and 332. You want to make sure that your policies and procedures include monitoring your subrecipients, sam.gov verification so that you're not awarding funds to any organizations that are debarred or suspended from receiving federal funds, and then review of single audits. Single audits are a specific type of audit that is required for some organizations who receive federal funds. The requirement is that any entity that spends $750,000 or more in federal grant funds in a single fiscal year has to undergo a single audit. And if you are the pass-through entity awarding federal funds to an organization that's undergone a single audit, you must obtain a copy of the single audit, review it, and take action if there are findings on the grant program that you've funded. You want to develop checklists and other tools to assist with subrecipient management. It's very important that you manage your subrecipients in a methodical way, and you want to make sure that you are following all of the requirements so those checklists can help you. Also, your subrecipients are going to ask you for funds, whether they're requesting advances or whether they're requesting reimbursement requests. It's not best practice for just one person at your organization to review those requests. You should have a reviewer and an approver, or perhaps even a three-tiered process, a reviewer, a second reviewer, and then an approver. You want to develop a subrecipient file system to ensure all documentation is maintained for future audit. There are things like risk assessments that are required, formal written determinations that show this entity is a subrecipient. Those are things you want to make sure that you're capturing, that you have in your files until you're allowed to dispose of those records 3 to 5 years after the grant ends. In the case of the American Rescue Plan, it's 5 years after your grant ends. You want to provide training and technical assistance to subrecipients across the life of the grants. These trainings, our lunch and learn trainings, are a way that Louisville Metro government has provided training and technical assistance to our ARP subrecipients. And we suggest you make yourself available to provide similar trainings, that you have a handbook for your subrecipients, that you have a resources page, that you at least have someone at your organization who can provide this training and technical assistance to these important partners you have. You want to also work with your subrecipients to help them build internal controls into their policies and processes. So the next common finding is time and effort requirements are not followed. The 2 CFR 200 requires that all personnel costs charged to federal grants represent time spent working on the grant, actual time worked on the grant. If somebody is charged 100% to the grant, which means 100% of her salary is charged to the grant, if she's truly only working 80% of her time on the grant, you can't charge 100% of her time to that grant. So just having timesheets and payroll reports do not provide the support needed to meet the time and effort requirements. If you don't have additional documentation showing that that was real time spent working on the grant, an auditor may give your program a finding. That finding might mean you have to repay grant funds related to those personnel costs. And because many grants are used primarily for staff time, a repayment could be very significant if nobody being charged to the grant tracks his or her time. So why are the timesheets and payroll reports not sufficient? Well, as I said, somebody could be budgeted 100%, but only works 80% of her time on the grant. When you show a timesheet or a payroll report, that alone doesn't signify that the time was spent on the grant. It doesn't, and timesheets usually don't show what the person was working on, and payroll reports, I've never seen a payroll report that showed what the person was working on, although some external payroll companies do allow you to split people's labor between functions, and that could possibly be a way to meet time and effort requirements. Let's see, we've got a scenario here where staff member Bob works most of his time on an ARP project, but his organization requires him to participate in a weekly meeting for an unrelated program. During those meetings, Bob does not work on the ARP project. The federal grant should not pay for the time Bob spends in those meetings, and yet in this scenario, the organization is still charging 100% of Bob's time to the ARP project. That wouldn't be allowable. That's a potential audit finding. So, what internal controls should you put in place to meet the time and effort requirements? One is implement a time tracking system that complies with 2 CFR 200.430. And you'll want to look that up if you do have staff time that you're charging to the grant. Not only does it discuss how the eligibility of staff time, but there's also a section in 200.430 that discusses the documentation requirements for personnel cost. The best practice is to have staff who are paid, who are charged to a federal grant like ARP, and one or more other source complete monthly personnel activity reports or PARs. So I'll say that again since I messed it up a little bit. If you have a staff member who's working on more than one project, one of them's the grant funded project, then that person should complete time tracking every month using a type of time tracking called a personnel activity report, where each day the person tracks his or her time and what he or she was doing during that time and what fund that person's time is charged to. So it might have different columns where grant A, grant B, grant C, and Bob from the previous page, our example, can say he worked 2 hours on the first on grant A, 3 hours on grant B, 3 hours on grant C. And that's how PARS works. So the PAR report must include a daily breakdown of the work performed for each funding source. For instance, 6 hours client intake for the ARP grant and 2 hours client intake for an HHS grant or Health and Human Services. PARS is very important, and although it's an important step to comply with the regulations in 200.430, you also need to develop processes for someone at your organization to review those PARs to verify the time reported is accurate. As I said earlier, the PARs should be reviewed and signed by a supervisor or someone else in the organization or agency that can verify the time worked. And then you're going to have processes to calculate the staff member's personnel costs for time spent working on the ARP project and to make sure that only those dollars that represent actual time worked on the ARP project are charged to your grant from Metro government. Now we're going to talk about late programmatic reports or late reimbursement requests or draws. So to avoid having findings for late reports or requests for funds, put all reporting deadlines on your calendar, or even better, on a shared calendar so that you are not the only person who knows when these reports are due. Create reminders for each deadline, and you can do shared reminders to make sure that other people know that the deadline is coming up. If you use our grants management system, GovGrants issues reminders about those reimbursement request deadlines. You want to make sure that there's more than one person in your agency who can submit the reports and the programmatic reports and the reimbursement request. And it's not a good practice to have just one person trained on this because turnover happens. Somebody might win the lottery and leave, or they might have an unexpected medical emergency and be off the week the report's due, and someone else in your organization needs to be able to submit those reports. In GovGrants, our grants management system for ARP, you can have more than one person registered as primary user for your organization, and any primary user should be able to submit your reimbursement request. If you have subrecipients on your ARP project, you want to also make sure your subrecipients know their deadlines for reporting and for submitting reimbursement requests to your organization. And you want to monitor to make sure that they're complying with those deadlines. Got a few more questions for you. The first is a statement. There are no potential findings associated with subrecipient management. Is that A, true? B, false? There are two potential findings associated with subrecipient management. Or C, false? There are many potential findings associated with subrecipient management. And the answer is C. Although we didn't go over the requirements found in 200-331 and 332 today, there are many requirements and many areas in which there could be findings. You should start gathering data for the programmatic report as soon as you have data to report, the night before the report's due, or at least a week before the report is due. And the answer here is as soon as you have data to report. If you wait until the last few days, you might not have time to gather everything. So you want to start building those reports at your earliest opportunity. What is the purpose of personnel activity reports or PARs? Is it A, wasting time program staff could spend serving the community, or ensuring personnel costs charged to the ARP project reflect actual time spent on the grant? Of course, it's B. We know PARs take time. You have to complete them every day, but they should just take a few short minutes every day. And staff taking the time to complete the PARs will prevent audit findings if you use those PARs as the basis for the cost you charge for personnel to your grant. Now we're going to talk about financial findings and internal controls to avoid financial findings. There are a lot of potential financial findings. The first is the reimbursement request or financial report contains errors or reported amount differs from actual amount spent. Next is ineligible costs have been charged to the grant project. The grant project has been charged for a cost that is not allocable to the grant or has not been allocated correctly. So for instance, if you have somebody charge 100% of their time for the grant, but they only work 80% of their time on the grant, that would be a cost that was not allocated correctly. Another potential finding is costs charged to the project exceed budgeted amounts. You need to stay within your budget or get an approved budget amendment. Another finding is vendors or suppliers are paid without verification of receipt of deliverables. And that's a requirement that we monitor to make sure that when we receive invoices from vendors, that we have made sure we've received those products or those services. Another common finding is financial policies and procedures are not followed or do not adhere to the Uniform Grant Guidance. And required approvals are not obtained or obtained from the wrong source. So again, with a personnel activity report, let's say your process says the supervisor signs off and you have PARs that are not signed, therefore you're not following your financial policy, or you have someone else sign and not the supervisor, again, you're not following your policy. or your process. Another potential finding is financial and procurement documentation is missing or not maintained in auditable files. You got to keep all your financial documentation, every last bit. And that includes anything related to purchases, that includes financial reports such as a general ledger report, an income statement, a balance sheet, whatever financial reports you run for your grant funded project, all of those need to be kept. Your reimbursement request and how the reports that were used to develop those reimbursement requests, you want to make sure those are all kept and they're kept in a systematic manner in your network files. So how do you avoid these common financial findings? One way is to learn the federal cost principles, and we've got a training on the cost principles, and train all your grant staff on the cost principles, your administrative staff on the cost principles, anybody who has any involvement in cost charged to your federal grants. If you don't have time right now to watch our training on the federal cost principles, you can also find them in 2 CFR 200 subpart E. You want to develop an allowable cost policy and procedure that guides your staff in determinations of whether costs are eligible to be charged to grants or not. You want to develop or update your financial policies and procedures, financial management policies and procedures, and you want to make sure that they're aligned with the 2 CFR 200 subpart D. There are quite a few financial system requirements and financial management requirements in subpart D of the 2 CFR 200. You want to include monitoring steps in your policies and procedures to ensure they're being followed. What good is it to have a policy and procedure if you don't know it's being followed or not? So you want someone tasked with ensuring compliance with your own policies and procedures. You want to make sure you train your staff on the policies and procedures. It's very important that they know the correct policies and procedures. You want to implement something like an expenditure verification process that includes the review and approval of all costs that will be reported to the funder. So let's say your program manager prepares a report, a reimbursement request, let's say. You're going to have someone in a financial capacity at your organization verifying that request and making sure all of the cost comply with your financial system for the information that's in your financial system, but that also they are eligible per the 2 CFR 200 cost principles. You want to perform reconciliations at least monthly or before submitting a reimbursement request, and those reconciliations should be your grant budget versus your actual expense. So let's say you've got $50,000 in personnel cost, and at your monthly reconciliation, you see that you've spent $30,000 in personnel cost. That means you've got $20,000 more that you can spend. You want to implement a preparer and approver process for all financial reports or reimbursement requests, which I already briefly touched on a moment ago. You shouldn't have just one person prepare anything and send it, whether it's financial or programmatic. It's always a good idea to have other reviewers and approvers. You want to develop and implement a documentation maintenance system for all financial and procurement documents. And you want to schedule audits. You want to schedule and conduct audits to ensure all documentation has been maintained in auditable files. And auditable means that you could turn that file over to an auditor and he or she could find everything easily and will have all the necessary documentation at his or her disposal. Got a few more questions. A cost has been allocated to the grant project correctly when A, the cost is listed as eligible in the 2 CFR 200. B, only the portion of the cost that benefits the project has been charged to the project. Or C, the actual non-rounded cost has been reported. The allocation principle, cost principle, is that you should allocate cost or assign cost to the grant according to the benefit the grant receives. So the answer is B. Only the portion of the cost that benefits the project has been charged to the project. So again, not to beat a dead horse, if you have someone charging 100% of her time to the grant and she only worked 80% of her time to the grant, only 80% of her time benefited the grant, and you should not charge the grant 100% of her time. Reconciliations can help A, track expenses against the budget, B, identify accounting errors, C, identify missing transactions, D, improve accuracy of financial reports and reimbursement requests, or E, all of the above. And the answer is E, all of the above. If you are not reviewing your total financials on at least a monthly basis, you are probably not catching errors that have occurred. And sometimes these errors can result in you not getting all of the money that you're owed from a grant. For instance, if a cost is accidentally charged not to the grant, but to some other fund that you have in your financial system, doing a reconciliation may identify that that cost has been applied incorrectly. It can be moved to the grant and then reimbursed by the funder. If you do not have documentation to support a cost, A, report the cost anyway and hope the grant is never audited. B, obtain or locate the documentation before reporting the cost. Or C, report the cost along with a note to the funder that the documentation is missing. The answer and the only correct way to proceed is to obtain or locate the documentation before reporting the cost. You have to have that documentation, or you should not charge the cost to your grant. Well, we've learned a lot about different internal controls, and now we're going to discuss how you put those new internal controls into place. Now that you know some effective internal controls, it's time to start planning to implement them. Before you implement any new controls, you should consider whether the controls you have identified work for your project, can prevent noncompliance, can help you achieve program objectives, right? They need to meet those 3 criteria in order to be effective. The next slide lists questions you should ask yourself before you finalize any new internal controls. Does the internal control help ensure grant funding is properly used and spent as intended? Does the control detect or prevent errors? Does it contribute to record and reporting accuracy? Does it assist in meeting grant performance deadlines for outcomes? Does it reduce the risk of fraud? These are very important questions to ask yourself as you're building internal controls. If the answers to the previous questions are overwhelmingly yes, you've probably developed a great internal control. There's one more thing for you to consider first, though. Remember that you have to balance the internal control against the possible risk of noncompliance. Well, what does that mean? Aren't all internal controls good? Well, if you build inefficient and inconvenient internal controls into your program, you increase the risk that staff will bypass the control procedures. So if a staff member has to jump through 15 hoops to follow the internal control, that's going to be too much. And you're going to see the staff doesn't want to follow that. And they're going to start taking shortcuts, most likely. So even though it's important you have these internal controls, they have to be effective, and they can't be so inefficient that it takes more time to comply with them than you have to operate your program. So be sure you're balancing those controls against the real world need of your program. Once you've developed strong internal controls and you've recognized that they are balanced with your program and they are going to be effective and efficient for you, you want to add the internal controls to your standard operating procedures and your policies. Train staff on all new processes, and monitor the processes to ensure staff are following them. Got a few last questions. Which of the following are characteristics of a strong financial internal control? The control helps ensure grant funding is spent as intended. The control reduces the risk of fraud, and the control prevents or detects errors, or all of the above. And the answer is all of the above. Once you've developed new internal controls, you should implement them immediately. Is that true or false? It's false. You want to develop those controls and then perform some sort of analysis to make sure that they're not ineffective and too burdensome that staff won't follow them. Got a few takeaways from this training today. Internal controls minimize risk, improve compliance, and help prevent audit findings and repayment of grant funds. The federal government, through the 2 CFR 200, requires all grant recipients and subrecipients to include internal controls in their federal grant programs. You need to put them in your policies and procedures. Both preventive and detective controls are effective at improving compliance. Again, preventive is on the front end, detective is on the back end. Recipients and subrecipients should build internal controls into policies and procedures, train staff, and monitor adherence to the internal control processes. This makes sure your internal controls are tailored to your business processes and needs, and it balances the controls. And you should balance the controls with your program goals and objectives so they do not decrease the effectiveness of your program. That is my last slide. I want to thank you for watching this training, and be sure you reach out to the American Rescue Team at the Office of Management and Budget if you have any questions about internal controls. Thank you for attending.